Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price made it past the $1,800 per ounce mark this week, rising as high as $1,810, but sinking to just below $1,800 by the time of this recording. As next week approaches, attention is shifting to the U.S. Federal Reserve's upcoming meeting, which will be held from November 2nd to 3rd. We've spoken previously about the market's expectations for this gathering. It's widely anticipated that the central bank will announce plans to start tapering its bond buying program, but will not make a move on interest rates just yet. Chair Jerome Powell reiterated those ideas recently, saying in a virtual appearance, "I do think it's time to taper. I don't think it's time to raise rates." The question for gold market participants is whether tapering from the Fed will mean anything for the yellow metal. We asked our Twitter followers that question a couple of weeks ago, and opinions were split almost 50-50. Gerardo Del Real of Digest Publishing firmly believes the upcoming Fed meeting won't have much impact on gold. Speaking with me this week, he said in his view the central bank's double talk has eroded its credibility so much that it won't ever return. But that's not to say he isn't optimistic about gold. Although he admitted that its recent price action has been frustrating, Gerardo said he expects a substantial rise in the next 6 to 12 months. Importantly, he pointed out that events don't have to happen in the order that people expect them to. In other words, we may see all the fundamentals in place right now for gold, but it doesn't mean we'll immediately get a price rise. I also want to take some time to look at the uranium market, which remains very hot right now. I heard this week from Peter Grandich of Peter Grandich and Company, who's been bullish on the commodity for about 2 years now. The situation has definitely changed for the better in that time, and he suggested that while the easy gains may be over, the market is still only in the 3rd or 4th inning out of 9. With Peter's comments in mind, we asked our Twitter followers if they've taken any profits off the table when it comes to uranium. The poll was ongoing at the time this video was recorded, but the answer was a resounding no. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Going back to Peter's thoughts on how to approach the uranium market, he said since the number of companies out there is so small, he's always been an advocate for looking at the larger players first before moving down the chain. He also warned that as the uranium space heats up even further, new entrants will start to emerge. While a rising tide can lift all boats, Peter said it's important to remember that utilities can't do deals with companies that aren't producing. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.